Joining us now is Tony Zhang, chief strategist at Options Play, and we're looking at a couple of tech names that he has on his radar. Now, Tony, let's start with Google. That's your first pick. Walk us through why Google's one of your top picks in a highly competitive space right now.
It's a highly competitive space, but Google stands out on its own with regards to the valuation that it's trading at. There was a lot of concern over the last few quarters that generative AI with ChatGPT, Grok, and Claude, that was going to make Google's search product irrelevant. I think Google has shown us that that is not the case, that if anything, Google's integration of Gemini into the search engine has been a very successful implementation. And on top of that, Google has been very strong and far more aggressive than they've been historically on integrating AI directly into the fairly deep product mix of products that they offer across both personal and their business lines. And I think that's really kind of one of the more successful opportunities to actually monetize AI. As all of these tech companies are spending tens of billions of dollars a year in CapEx to try to dominate in this AI space, there's a lot of questions from investors as to whether or not that's going to translate into enough revenue to justify this spend. There's definitely a lot of concern these days, around whether or not AI is quote unquote a bubble. But I think with firms like Alphabet, I think the risk of that is relatively lower because one, they generate, over $95 billion a quarter in revenue. So an $85 billion capital expenditure in fiscal year 25 is something that they are capable of spending. But more importantly, Google and Alphabet has, similar to Meta, which is another one of my favorite plays within the AI space, has a true capability of monetizing AI across their fairly deep product mix. A lot of people, they have a lot of users using tools like Gmail and their business suite, their G Suite. So this is really where I think they are able to use AI and monetize it. So the fact that Alphabet trades at only 23 times forward earnings is incredibly inexpensive, in my opinion, for the long-term upside of AI. And if you look at growth rates, if you look at the fact that EPS and revenue growth is growing in the 12 to 14% range, net margins are north of 31%. The fact that it trades at 23 times earnings, it is one of the cheapest tech stocks, even without AI as a theme behind it. So this is one of my top picks in this particular space.
And with Alphabet, how important is its cloud business to its success and its AI strategy?
It's a huge part of it. Google Cloud has grown quite a bit here in the last few quarters. They've played a lot of catch up here to Microsoft Azure and Amazon Web Services. And the cloud is essentially the way that AI is going to be deployed. So, the recent acquisition of Wiz, specifically for securing the cloud, is an important part and just shows you how important the cloud is for their overall strategy. A $32 billion acquisition is the largest acquisition they've done in quite a while. And this is really part of why, confirming that cloud is such an important part of their business, especially for AI going forward.
All right, let's move to your next one. Micron has been on a tear year to date, up 142%. Why is this another top AI pick?
Yeah, and I think that even though it's been on that tear over the past less than 6 months, there's still, in my opinion, a lot more upside here. We're looking at 50% quarter over quarter growth in terms of the high bandwidth memory chips that they are now supplying to NVIDIA. The fact that Micron trades at only 11 times forward earnings is really what leads me to believe that there's substantially more upside left in Micron. You see the fact that in the last couple of quarters, they've raised, guidance substantially, both on revenues and earnings. But more importantly for me, they've expanded their margins in just the last couple of quarters from 18% to 22% in terms of net margins. That's not quite the same numbers we're seeing out of NVIDIA, but it's growing nearly as fast as NVIDIA from both the revenue and EPS perspective. They are clearly focusing their attention on a much higher margin business than they have historically been. And that's why the fact that it only trades at 11 times forward earnings, I think, is one of the most undervalued hardware plays within the AI space. And you look at the fact that Samsung, which is the largest player in this particular space of high bandwidth memory chips that go into the GPUs for these AI infrastructure or AI data centers, it's very clear that Micron is stealing a substantial amount of market share away from Samsung in just the last quarter alone. And that's really kind of why we're seeing such high growth in this particular space. So the fact that it only trades at 11 times forward earnings, I think, is one of the cheapest plays. You compare that to Nvidia, and I don't think it's a fair comparison to put Micron in the same league as Nvidia. But the fact that they're a major supplier for Nvidia chips, and Nvidia trades at over 40 times forward earnings, growth rates very similar. And the only difference between Nvidia and Micron is the fact that net margins are 22% for Micron versus over 50% for Nvidia. But one's trading at 11 times forward earnings, the other one's trading at over 40. And I don't think necessarily Nvidia is cheap, but I also don't think it's too expensive given just the expected growth rates and how profitable Nvidia is. But Micron is playing in that same space. So the fact that it only trades at 11 times forward earnings leads me to believe there's substantial upside that's still left, even though we've seen that substantial tear in the stock in just the last 6 months.
Yeah, I mean, certainly hard to argue that it's discounted against the rest of the industry at 11 times earnings. But I saw a note from Citi saying that Micron will be the next to the DRAM, and HRAM will be the next chip to get the long-term contracts in the AI food chain, given its importance, and also mentioning the undersupply, raise their price target to a 20% upside. If that proves to be true, what would that mean for Micron?
High bandwidth memory is kind of where they're focused on, but actually we're seeing a lot of strength here in their DRAMs as well, which is their business that they were in prior to, focusing on AI for their business. They seem to be hitting it on both. They're hitting it on all cylinders right now, both in terms of their supply for high bandwidth memory, which the supply remains incredibly tight at the moment. Samsung has had some operational stumbles recently in the last couple of quarters that Micron has been able to capitalize on. And even then, supply remains incredibly constrained. And that's why they have pricing power here for the high bandwidth memory chips. But DRAM, which is their traditional business that they've been for many, many years, they've actually still continued to see substantial growth in that business as well. So the fact that they're firing on all cylinders is really what's driving kind of why I think analysts are getting a lot more bullish on this particular stock. And the recent breakout here, the stock just broke out above 200 today. It's consolidated a little bit in the last week. So even despite the market volatility that we saw in the last week or so, the stock hasn't budged. And that just shows you the resilience and the strength for this stock and the momentum that we see for this stock. And the fact that it broke out here above 200 today leads me to believe that we're just about to start the next leg higher.
Well, Tony, we appreciate you being with us. Always fantastic having you on this show, and great breakdowns of some of your AI picks there. That's Tony Zhang, the chief strategist of Options Play.